Hey everyone, welcome. John Gillingham, CPA from LearnDebitsandCredits.com. Also, Accounting Play. This right here is your workbook. If you haven't gotten this, go ahead and go to LearnDebitsandCredits.com, and that's where you'll be able to go ahead and pick up this little guy. So we are going to hop right in here. What we're doing is we have a ton of transactions, A through N. So receive $100,000 investment for common stock. Okay, so this is all going to assume that you have some knowledge of your debits and credits. Now, also, the sheet to the right here is a worksheet provided for you. I already have the account titles to make things simple. Here are blank journal entry page, which will try and fill this out. My handwriting's terrible. And if you keep scrolling down, here's the same page that we're looking at, right? And then we also have the balance sheet. So I suggest you print all this stuff out and write it down. And here are all your answers. Close your eyes, close your eyes. Okay, answers, answers, answers. This is what we're going to look like on our T accounts when we're all said and done. Okay, kind of split screening here so we can go back and forth. See if I'm even right. You'll see sort of my workflow through this as well. Now this is a long problem. This is like a master set. The beginning entries are fairly basic. Now here, if you want to challenge yourself, you could do it all, print out the blank ones and go from there. So in the PDF ebook, you have a lot more resources, but this is just one practice. If you master this, you're going to be stoked. It's going to be awesome. Also, check out the Debits and Credits game on iOS, accounting flashcards on iOS. Hit me up, show some love. Now check it out. Receive $100,000 investment for common stock. Cash is going to go up. So we know that cash goes up with a debit cash up. We just know that. So I'm going to jot in 100, little 1,000 in there. Okay, my handwriting sucks. That's why I use the keyboard. Now, instantaneously, if there's a debit, we know there's a credit. Issuing common stock, debit, cash up, right? That's going up. And common stock is also going to go up with a credit. 100,000, right? Also going up. So we're on two different sides of the balance sheet. This being your famous equation right here. Assets equals liability plus equity, right? So we want to stay super organized, nice and perfect, just like my perfect handwriting. So I'm going to go ahead and jot down a little, great, a little transaction A next to that, okay? Also going to put a transaction A there as well. So we know that that's the case, okay? So we know this is cash going up here. So, boom. We have transaction A. And what I always like to do here is do what's called ticking it off, right? So if I like that, I got my A, I'm just going to make a little tick mark. Now, B. So this is adjusting journal entry 1. Now, you can run through all of these, or you can do the journal entry as well. So let's go ahead and look at what a journal entry would look like for receiving $100,000. So here we have Yo Company. Yo Company is going to be whatever you want. And just think of it counting questions in the perspective of your own company. So then it's relevant and fun. So anyway, AJE1, we're going to debit cash, because debit cash up. Cash is coming in, and boom, we have 100,000, right? Neat as possible. Dang, that's not a third grader. Okay, now common stock. So I'm going to abbreviate a little bit. I know it's obnoxious, but I have to. Common stock, we are increasing that also by 100. Okay? This area here, notes for your study reference. You can jot down your own little notes there to kind of help you out. I have notes that try and make a little bit more sense of it. So debits equal credits, and the memo, I can say issue stock for cash, because that's pretty much what happened there, right? Cool. Next, transaction. I'm going to flip back over to here. We have purchased $20,000 of equipment using note payable. So equipment is an asset and note payable is a liability. I just try and start with the side of the transaction you know. So purchase $20,000. That's asset up. So we're going to do equipment for $20,000, debit, equipment up. Again, if this stuff is like, if you're lost already, it's time to start with the basics, okay? And this is a little bit more advanced. You like that? Great. Okay, so here's our T accounts. We have debits and credits. So debit equipment up for $20,000. That is going to be transaction B, right? So you see how I'm organizing my work so lovely. And what was the other side of it? Was a note payable. So that is going to be 20,000. Okay. I don't necessarily feel like doing all the journal entries, but I'm going to go ahead and do at least these first two. Okay, because not super annoying when that happens. So we're going to magically say 20,000. Great. So this is going to be transaction B. Now you can work through all this by yourself and look at the answers, or you can go through this lengthy video. So coming down here, oh my gosh, that is some awesome handwriting. Adjusting journal entry 2. What happened? We need a debit first. That is here in equipment. So equipment. Oh yeah. Equipment is going to come up with a debit, 20,000. Nice. And our offsetting credit, debits always have to equal credit, it's going to be another 20,000. $20,000. Yeah. Some people also like watching this in 2x mode if it's too slow, or 1.5 times. But again, this beginning for the beginners. Equipment, credit, accounts payable. Right? Here's our AP. In balance 20,000, 20,000. And my memo is going to be purchase equipment for 20,000. Yeah. Okay, don't do that. So there's our journal entry 2. Now if it helps, you could also reference this one with journal entries, but we're going to run out of room here. So this common stock, that is sure kind of tough to see there, but I'm referencing A. So this here, all in all, only being, thank you, being 100,000. Transaction A. Okay. We'll take these out because we all know that things increase what the debit assets do. Okay. I'm also going to clean this up. So as you do it, you got to be as neat as possible. And that's a little bit difficult with how I'm doing it. So let's check it out now. Alrighty. Only 12 more to go. $8,000 credit sale. When it's a credit sale, it does not involve cash. Okay? Credit sales are going to involve accounts receivable. Yeah, we like accounts receivable. Now, accounts receivable always comes after cash here. So $8,000 credit sale. Accounts receivable is going to increase with an asset. But let's say you just know that sales increase with a credit but you're not sure about this receivable thing. Or you don't even know. It doesn't even say receivable. But when you see it's saying credit sale, that is your cue that involves accounts receivable. So you can mark this up however you want, of course. So sales, let's go ahead and credit sales for $8,000. 8,000. So good. And that was transaction C. Okay. Now, maybe you don't know what the offset is, so you just know it's a debit because it's a credit over here, but it's a credit sale. We're going to go ahead and put this to 8,000, and this will be C. Now we go here. Okay. So I don't feel like doing the journal entries anymore because I don't know if that's going to help you watching me do them. So here's all the blanks. I want you to try them. Debits, credits, debits, credits. And then down here is where you'll get to see the answers. Ooh. Close your eyes. Okay. Now, record utilities expense for $500 after receiving bill. Notice that in this problem, collect $8,000 from credit sale. Okay. Now it's collecting money. You see collect, cash is going to go up. So let's go back to our cash here. And we'll go ahead and put that 100,000 is still going to stay there. Let's go ahead and put 8,000 in here as well. Alrighty, 8,000 there. Okay, and that concludes half of it. Oh, see, we're out of bounds. 8,000 here, and since we're collecting a credit sale, 8,000 here. These are effectively canceled out, but I'm not going to cancel them out yet. So 8,000, since we're really cool accountants, I'm just going to put a little D there. That's awesome when that happens. I'm going to put a little D here and put a little D here. Okay, I'm a little bit impaired in my handwriting. Get rid of this garbo. So check it out. Now record utilities expense. Notice these words, record. Okay, record is not a cash thing. You just received the bill in the mail. Okay, so when you receive the bill in the mail, it's going to go into accounts payable. So accounts payable here is going to be 500. All right. That's really going to bother me. Okay, 500 there. And now you're going to have an expense. So now we're in the income statement area where revenue minus expense equals a profit or a loss. So recording utilities expense is going to be 500 debit. 500. Awesome. All right. That is going to be E. All right. Pretty sweet. So I'm going to go ahead and temporarily, just for fun, close these accounts out just so you could see what that would look like. You would add up 100,000 plus the 8, which would equal 108,000. Accounts payable, 20,000 plus 500 is 20,500. Common stock, bring it on down. 100,000. Accounts receivable is effectively canceled. Equipment is brought down to 20,000. Okay. Moving on down here, we would have sales credit of 8,000. Utilities would come down to 500. Now, at this point, all we've really done is buy some equipment, issue some stock, have some accounts payable. We are only to here. We're just going to do a little bit of a shortened version until I can get something a lot prettier than this handwriting. Now, if we were to close out the income summary, we would be utilizing this account. Okay, we're trying to wipe out all of the income and expense accounts. So you'd put an entry into 500. Since we're crediting here, we're debiting here. Okay. Notice how we're pretty much just connecting these two effectively. Now this disappears. Sales, we want this closed out too. 8,000. This disappears. 8,000 here. Okay, awesome possum. Now, once we bring these down, one's going to eat the other, right? 8,500, 7,500 is going to be left here in the income summary account. Because effectively they had revenue of 8,000, utilities of expense of 500. Now to close out income summary, we would do 7,500, and then that would be an entry to retained earnings of 7,500. Now, from this information, we could come down to the sum of all assets. Sum of all assets, we have equipment for 20, cash for 8, 8,000, 20,000, 108 and 20. So 128, excuse me, 128,000, 128,000. Liabilities is 20,500 of accounts payable. 20,500. Now this is my first freaking video ever, so it's terrible. But at least I'll give you an idea of how to work this worksheet. So sum of equity is going to be the 100 plus the retained earnings. So that's 107,500. 107,500. And I think that's going to add up 128,000. Great. So we know already that the sum of assets would be in this 128,000. Sum of liabilities is 20,500, right? Isn't that what we decided? Can't even tell with my own handwriting. It's pretty sad. 20,500 is going to be total liabilities. So we already know that. We're just kind of like trying to make our lives freaking easier here for these financial statements. Just like I'm trying to make my life easier by not even doing the whole problem. But you know what? You do the whole problem, do your journal entries, and look at the answers, and you're going to be so far ahead. It's going to be awesome. $108,000 in cash. So 108,000. Accounts receivable, I know we saw, nope, none of that. We had equipment of 20,000. So let's get that. 20,000, what's up? No depreciation. Now this, just remember, these are only this many transactions, okay? These are transactions 1 through 5. None of this other stuff. So this is just to get you started with the worksheet. Equity, we have common stock of 100 up here. Retained earnings of 7,500 down there. Okay. Common stock, retained earnings was 7,500. Retained earnings is 7,500. Now this is actually how it looks like when I work. And then I take it to the computer and make it pretty, which I'll probably end up doing for this video. But at least you get to see sort of the process. Common stock 100,000, right? Liabilities plus equity better equal assets. In this case I'm saying 128. Yeah? That's a CPA that can think outside the lines. So sales 8,000. Go ahead and pop that in there. 8,000. And then we also had 500 of expense. Total expense was somewhere 500. I don't even know what it was. What was it? Utilities. Total expense 500. Yay. And this minus this is 7,500. Now note how these two are connected, right? It's great. We don't want that. So this is how it really looks, okay? And then we also have the continuation of this example. Now, please check out the debits and credits game, which is accounting play. Learn debits and credits. Check out accounting flashcards. Hit me up with the review at the bottom of this horrific video. But at least you know it's something. It's a start. I'm trying for you. Right? You can do this. It's not that hard. You just need to practice again, again, again. If you don't know your debits and credits, you got to work on them. Okay? You know, cash. You can use this however you want in your class. Treasury stock you probably don't even know about. All right? So thanks. And email me. All right? Please directly at John at accountingplay.com. Okay? Got the apps, show love, 5 stars. We got free podcast, ton of audio. All right? All at Accounting Play. Tell me what you want me to do and make, and I will freaking do it. Thank you so much. Keep working. It takes a long time to learn this, so keep drilling each way.